Hey everyone, welcome back to my channel, Bearcat Trading. In today's video, I'm going to be talking about trading journals, why they're important for beginning traders, how to set up your first trading journal, and how to use it to improve your trading. At this point in your trading journey, whether you're brand new or you've been doing this for a while, I'm sure that you've heard about the importance of using and keeping a trading journal. But where to get started? I thought I would put together this video of a very quick and easy trading journal that I put together, that I've been using, that has already helped improve my trading over the past few months using it. So you might be asking yourself why? Why do I need to keep a trading journal? Well, first, it helps you actually think about the trades that you're taking so that you don't just trade blindly. Every trade that we take as traders needs to have some sort of thesis behind it, some sort of checklist that has been marked off that allows us to enter the trade and exit the trade. And it's important to track this stuff over time so that you can continue to grow and refine your skill set to become a better trader. The second thing is, whether you're making good trades or not, it's incredibly important to track it so that you can clearly identify what you're doing well or what you're not doing well. A trading journal will help you identify your edge and allow you to grow your edge to become a better trader over time. If you're a new trader and you're just getting started and you're not so sure about what your edge is or where your mistakes are, a trading journal is really going to help you identify that and track it over time so that you can improve and get better trade over trade. Also, if you're new to trading, a trading journal is going to help you create your trading checklist, the key indicators that are required in order for you to enter a trade and exit a trade appropriately. So over time, if you're entering blindly or you're trying to ride momentum or you're seeing certain patterns that you're trying to get into and trade, a trading journal and tracking all of that is going to help you identify what certain conditions need to be met in order for you to enter a rising wedge pattern or a low of day break or any other pattern that you see out there that you want to trade. Keeping the trading journal and updating it and going back to review it is going to help you identify that checklist so that you can enter really high probability trades. So if you've Googled this term or looked anything up online, you might have seen that there are a lot of software programs out there that are available for you to track your trading and to create a trading journal. A lot of them are automated. They'll plug right into your brokerage account. They're really great. But one of the things that I personally like about doing it in a very manual process is holding yourself accountable. Every time you enter a trade, you need to put yourself in that position to jot down the why inside of the spreadsheet, to understand why you got into the trade, what your thesis is, what your emotions are in that moment. Things that an automated trading journal that's just pulling the entrance and exits and timestamps and prices from your brokerage are not going to cover. Having a manual trading journal that you update yourself allows you to put in these little nuances in real time so that you can track your emotions, track your thoughts, track everything that's going on as you enter and exit these trades. Now that we've gone through the why, let's jump into actually creating a very simple trading journal that you can start today to start tracking your trades and getting better. So I'm going to quickly throw together my trading journal and I'll review it with you. We'll go over the column headers and how I enter data into it and how I review it at the end of every trading day and at the end of every week. So here we've got my trading journal, and these are the column headers that I'm tracking with every trade that I'm making. I'm tracking the day in which the trade took place, the date, the expiration of the contracts that I'm trading, the ticker that I'm trading, the quantity of contracts that I'm trading, the position, whether it's a long or a short, the entry price of my contracts, the exit price of those contracts, the total P&L, the percent P&L, and the notes that I have of the trade, the chart setup, and the screenshot of my trade. To dive in a little bit on some of these column headers, obviously some of them speak for themselves and are very straightforward, but I want to highlight a little bit about some of the other column headers here that might not be as clear cut as date, expiration, ticker, and whatnot. So in the notes, I try and gather my emotional state at the moment that I'm making the trade and my conviction with the trade, whether this is a certain setup that I like that's breaking down. I've gotten confirmation candles, I've waited for a retest, I saw market weakness or news broke about a certain stock This is where I try and capture everything that I'm thinking and feeling as I enter the trade. Now, I also like to note the chart setup. This helps me establish patterns that I trade well and patterns that I don't trade well. So these come from a set list of patterns that I'm looking for, whether it's a rising wedge, a low of day break, a high of day break, a head and shoulders, a cup and handle. Those are some of the patterns that I look for intraday to trade. And so I will put that in there. And then this helps me as I'm going through and doing my analysis after hours or on the weekend to identify patterns that I do trade really well and refine my trading over time to focus more on those patterns and some of the patterns that I don't trade well. Now, the screenshot column is really important, and we'll go through and I'll populate this first line with some dummy data from a trade that I took a few days ago. But in the screenshot column, I try and take a screenshot of the chart at the time that I'm making the trade and show with arrows my entrances and my exits to that trade so that I can go back, weeks, months, however long down the line and still pull up that chart without having to scroll through my trading view and find the right date and the right time. I just have a little link there that will pull up the chart immediately, and I can go through and analyze my entrances and exits. All right, so let's go through a trade and I will show you how I work my trading journal and populate it with my trades. So this is Netflix, and this is Monday, February 14th that we're looking at here on the chart. Up towards around 11 o'clock in the morning, Netflix started to put in some lower highs and maintain this level right here of around 406. So if I were charting this intraday, I would start noting these lower highs and I would start charting them down and seeing that this was some sort of resistance where the price action was continuously making lower highs, but it was still holding this level right here. Now, just with the market and the way that it's been as of late, we've seen a lot of times the market rally in the morning and sell off in the afternoon. So in this point, I'm starting to get a little bit bearish. I'm seeing lower highs being put in. The lows are remaining about the same, but I'm looking for this wedge to break out either to the downside. Now, as I'm watching this, the price does end up breaking below here, and it ends up actually holding down here, showing that this former support has now become a resistance before selling off further. So this was actually a trade that I took yesterday, and I'll show you sort of how I go about populating the information into my trading journal. So when I get into a trade, I will go up here and I will use the arrow indicator and I will position it right above my entrance point. I use red because I'm going short, and this is where I entered the trade. When I go down and I end up getting out of the trade, I will put an arrow at the bottom, and if I was profitable on the trade, I'll make it green. And this way, when I take the screenshot and I go back and look at it, I've got it here to show me exactly when I entered and when I exited this trade. Okay, so let's go and document this trade. So it took place on Monday, on February 14th, 2022. The expiration on these contracts were weekly, so they were on the 18th of February. I was trading Netflix. I was trading one contract short, and my entrance price was $450 and my exit price was $560. Using a little bit of magic, we can calculate our total P&L as well as the percentage P&L. And now moving on to the notes section, this is where I will jot down my thoughts and my emotions as I was entering this trade. So we'll go a little bit something like this. So I don't know if you guys caught all of that, but this is essentially what I'm thinking. So I was watching Netflix for a breakdown. Lower highs were starting to be made. The price broke down here below this low. It began consolidating. I saw that this former support now became resistance, and I was waiting for this 9MA to get tested. Once it was rejected at the 9MA and it broke down below this new support, that is where I entered the trade. Now, I put this in right as I enter the trade. I'm still in it. I'm waiting. I now see that the trade has broken through my former resistance line of 402.50. I'm expecting a little bit of a bounce here, and that's where I exit the trade, and I document that thought as well. So here I will say I exited trade on bounce of support level of 402.50. Sometimes I'll write that if I had held this trade and I waited for that 9 MA retest here, and then I, watched it sell off more and I exited here, I'll jot down and document the fact that I remained patient, I waited for the 9 MA retest with further selling, and that's when I exited the trade. So really just trying to capture my thoughts and my emotions as I'm going through this trade. So when I look back on it, I might have more confidence to wait for 9 MA retests. I might have more patience to wait for additional selling that might come from a 9 MA rejection or anything like that. So it's really important to document those intra-trade thoughts as well. Now for the next column, the chart setup. This is where I will track that this was a wedge breakdown, so that when I go through my analysis in the future, I can understand how profitable, how good I am at trading this sort of setup. And for the next column, the screenshot, this is one of my favorite things about using TradingView. It's one of the main reasons that I use it, aside from its super easy charting tools, but having the ability to come in here and just copy a link to this chart image so that I can paste it in here. And at any point in the future, as I'm coming back to review my trades, I can click it, open it up, and have it all right here with my entries and exits. So I can go back and review my notes, better understand why I got in this trade and why I got out of it. Now that I've got this trading journal with all of my trade indicators populated, notes discussing my emotions and my thought process of why I entered and why I exited this trade, I will continue doing this for every single trade throughout the day. It encourages me to think about my trades. It encourages me to document my emotions and my thoughts at the moment of entrance and exit. And it allows me to go back and review the notes and have the screenshot of the chart there and available for me to look at so that I can better reference and see what I'm actually talking about in the form of a chart. Personally, when I first started trading, I kind of scoffed at the idea of creating a trading journal. I was way too lazy for it, and I didn't actually see how it could improve my trading. But once I created one and I stuck to maintaining it on a daily and a per trade basis, I've really seen improvement and a better understanding of my tendencies as a trader. Whether they're good or bad, using this trading journal, I'm able to document the emotions and the thoughts that I have when I enter a trade and exit a trade, and I can go back on a daily and weekly basis and analyze all of my trades and get better at trading from learning from my mistake. Without a trading journal, you're not going to be able to learn from your mistakes, and that's incredibly important if you want to improve and become a profitable trader. Also, through these notes and through my observations of how price action works with certain moving averages and certain patterns and things like that, I'm able to create a checklist for my trading. So, in the beginning of my trading, I would jump in the moment that a price level broke. I wouldn't wait for a retest. And then I became more mature and I started waiting for a retest. But through creating this trading journal and maintaining it over time, I'm now even waiting for confirmation candles. So there are now 3 steps required for me to enter a trade on a pattern breakout. The price needs to break out, it needs to retest, and then there needs to be a confirmation candle that we're going to continue on in that breakout direction. And that's something that I've learned by keeping a trading journal, and it's something that has helped me not lose money on a bunch of false breakouts and really refine my trading to become more consistent. So I hope you enjoyed this video. I hope you learned something from it. Leave some comments down below on how you keep a trading journal and some of the metrics that you're tracking over time. I would love to hear from you. Happy trading and good luck out there.